Check, check, check. Mm, mm. Okay, traders, today we're talking about the Trade Devil's VWAP indicator and just kind of a broader conversation of VWAP and how to use it in your trading. So I've got two charts here, and we're going to start with just a basic example here. Oh, let me take this off here. So I've just got a 2,000 tick chart here on the S&P. I do have our price action indicator loaded here, but I've got hide all here, so we're not looking at any of that. I just kind of want to focus on the chart. Now you've heard me say before in many videos that the three most important levels on the chart, on the playing field, if you will, every day are the IB high, the IB low, and VWAP. Now first, let's define VWAP. VWAP is the volume weighted average price. So how do we use it? VWAP is a benchmark for traders, institutions. For us as traders, we have to understand how the large players are using VWAP. So as I said, it's a benchmark for their execution. So it's used not only in stock indexes, but all individual equities, all futures market. There's always a price, a benchmark price. Where's the volume? Where's the weighted average price? So that's what we're trying to get to. So think of that as it's almost like it's home base. So we do color code ours here, and you can, of course, you set these colors to whatever you like. But if the price is above VWAP here, we're in blue. If it's below VWAP, we're in this magenta color. So how is it used? Well, so if you're an institution that's trading, and let's say we'll focus on the S&P, and then we'll put it in context with an individual equity. If you're measuring your trading execution for over the course of the day, ideally you want to sell above VWAP and buy below VWAP. So the expectation being that if you're selling it above, you're getting a better price for it than here. This would be, so you can think of this as almost as retail, right? So if you can sell it up here above the average price and then it'll move back towards price, you're making that difference. If I can buy it below and head towards, well, here I got it on sale, here I sold it at a premium. Once we get back to VWAP, you're kind of at fair value. That might be a better way to think of it. It's fair value. Well, whales, institutions, banks, large traders, they want better than fair value, right? They want a discount, or they want to sell at a premium. And that's how it becomes a benchmark for their execution. So, for example, if we were talking about an individual equity, so an institution might call you up and say, hey, all right, I want you to buy, I don't know, 10 million shares of Microsoft. But they're going to expect that you, as their executing trader, are going to be good enough to get them at a discount. So they're going to expect that you'll be able to buy it below VWAP. If they tell you to sell 10 million shares of Microsoft, they're expecting that you're going to be able to sell it above VWAP. So it's the same idea with any futures market, right? Where are you relative to VWAP? Where did you enter the market? If you sold, where did you sell relative to VWAP? So you'll find that because it represents fair value, that it will be a magnet throughout the course of the day, and whether or not we're having a trending or a range-bound day will be reflected in where price moves in relation to VWAP. So again, as I always do, I'm just using the most recent. I'm recording this on the 21st of February. So here's Friday the 19th. And just going back through I've got the last 5 days of data, right? I never cherry pick data. There's never any need to do it. So as we look here, here's Friday's data. As we're kind of waffling and we're tapping VWAP, so you have to know that that's there, right? So it's kind of the first premise. It's just like the IB high and the IB low. You have to know that that's there. Well, if you look here, once we get up here and we're challenging the IB high, we don't have enough strength to push higher. It ends up being a down day. Right now, at that moment in time, you don't know that. But once we fail at the IB high, where do we go? Right to VWAP, right? Once we get below VWAP, now we're down here. The remainder of the day, these retracements are attempts to get back towards VWAP. It becomes a magnet, right? So they want to buy it down here, sell it up here, sell it up here, buy it down here. But look at this as it relates throughout the course of the week. Now, It's surprising. It's surprising to me that I need to do this video. Right? I'm surprised, but we have many new traders or traders that are coming in with one particular technique that they're focused on, and that may be the price action trading, that aren't familiar with VWAP or how important it is to where you are in the course of the day, with regards to trend, lack of trend, or just that home base. Right? So it's very important that you know where VWAP is. So you can look at it here. We open the day, right? So here's our open. We're down. We get far enough. Here's the first test of the IB low. Right here, not to digress into that particular trade, but look where we go, right, after testing the IB low. Right now we can't get back to the IB low. Now we're up here. Now we get above VWAP here, and we end up the day, here, I'm getting a tick chart here. We're coming back. So you can see the market will kind of waffle, and ultimately always this will be a magnet. Right? Sell it below, above, buy it below. That's what they are trying to do, whether it's an individual equity or a futures contract. Right? So I'm just going through the course of the week. Here, we're at VWAP pre-market. We get this big push down. Right? We establish our IB low, back to VWAP. Right? Trying to trade lower, back to VWAP. Often you'll see the market hover here around fair value because the market's deciding, right, who's going to come out of this in control, sellers or buyers. Right? In this case, obviously sellers. We get below, back to VWAP. Now we're above, right? We finished the day. So here we had that big rip at the end of this day. We get the big push up here. But ultimately, look as we drift. Now the new day starts here, so I get a new VWAP, right? The start of the session. Right, get the idea. Another good day. Again, just framing the day, right? So what do we do here? Here's IB low, IB high, right? As we tag VWAP, right? Down, down, down. Now of course we get down too far, right? What are we doing? Working our way back towards VWAP. Right, down again, right? Here's the start of the new session. Same thing happens all over again. Is that? I guess that's a full week of data, right? So you can see how important it is with regards to your trading. You just have to know where it is, right? So now this is a different way you can look at it. So I will typically have this on both versions here or variations here. So here just often I absolutely want to know where VWAP is, and I would encourage you to be aware of where VWAP is. But here's a modification. In our VWAP indicator, we're giving you the ability to go up to, well, we can go up to 4, we can go beyond that, but 4 standard deviations would cover everything. But predominantly you want to be focused on 2 standard deviations from VWAP. So you can see the little color coding in here. So this light maroon background here, that would be 1 standard deviation from VWAP. Of course, we're going to, which will contain 68% of the trading around VWAP. And then the outer perimeter here, I have 2 standard deviations. And what you'll find is that when we get up to areas like this, where we're pushing up beyond 2 standard deviations of VWAP, the market will have a tendency to come right back to VWAP. Right? We get up here. Now here, you see where we are here at the IB high. We're right at 1 standard deviation from VWAP. Right? So back down here. Now here's 1 standard deviation. We get into this lower band here where we are between 1 and 2 standard deviations. Right? We're getting to, kind of extended here. Right? What do we do? Back towards VWAP. In this particular case, the IB low, right, blocks it from getting there. Right? And then they try again, right, and they can't get it. So now going back to the course of the day, again, just recognize here that when you get into this outer band, or those rare times where you get beyond it, here we get a couple of ticks beyond it, very high probability here that this is likely overextended and is due for a retrace back towards either 1 standard deviation here or back to VWAP itself. You see it just happens over and over and over again. So you want to have an awareness, because this is how institutions are measuring their performance. So if they can buy it below, or if you get too far below, you want to start looking for trades that would drive it back towards VWAP. And this can be a function also of whether or not we have a news-driven day, which is driving something. So if you got news in the middle of the day or early part of the day, you'll often see big pushes away from VWAP, but then it'll spend the rest of the day working back towards VWAP. It's very, very, very common. So here again, I'm just going back to, it's nothing fancy here. I'm just using the most recent week. Here's that example we just looked at. So we come down here, note here, we get outside of 2 standard deviations as we're tapping, we're establishing the IB low here. As we just looked at this one, right? What do we do? Straight to VWAP, right? Then back down. Now here, note again, outside of 2 standard deviations. Now this is telling you we have an extreme going on here. Note here we're pushing outside, back in, outside, back in, but we can't make it back to VWAP. Right, so even here, if I just blew up this day and kind of focused a little bit here on our indicators here, so you can see. Oh, let's see. I guess this will be an easy way to do it. So as we're trying to retrace here, which is reflected right here, we can't get above the 0 line. Back again, right? Can't get above. So same thing here, right? Can't get above the. So weak market. So as we push to these extremes where we're outside of 2 standard deviations, this, what is that? That's your 1215-ish. Likely you're at a point here now. If you start to see the potential for a trend change here, now we get. Wicked wave goes above 0, the devil's edge gets above 0. Now we're working our way back towards VWAP, right? Which is exactly what we do here. So this is just all part of that, an awareness of the day. Do we have a trending day? If we get too far from it, or is it reasonable to anticipate? Or let me rephrase that. If there's news that's pushing it down, right? Do we have enough news, enough weakness in the market here for this to continue to drive it down, where you're going well past 2 standard deviations, right? Where you're going to get 98% of the trading activity. Now, but note here, right? Eventually, even though we had this big push down, what do we do here? And that's likely, right? Just looking at it, right to a golden zone. Right, this was same kind of thing here. It looks like this would be the same trade, right? Do you see it right there? So there's the context here of VWAP, putting a few concepts together. So here's the swing, here's the retrace right to the golden zone, happens to hit the IB high and VWAP at the same time, right? That's a trade you want to consider. Right, so that's just see, the point is not anything in isolation. It's looking at a confluence of events here. So IB high, I got VWAP right here. I've got a retrace into the golden zone. These are probability events. That's what you're looking for. Same thing here, right? So we've been working all the way. We get it back to VWAP, right? Do we have a probability event here, right? That the trend will continue. In this case, it does. So I think that should give you some visual context of how to use this. It's a simple concept, right? We're just again, nothing says if we get extended here, we must come back. These are just tendencies, and the market is very pattern-based here and levels-based. So institutions will, right? So if think of the institution that buys it down here. They want to see it get back to VWAP so they can be the hero that bought it down here and perhaps sold it here, right? Rather than, oh, I bought it here and now it's continued to go lower. Right, the expectation is a reversion to the mean. Right, so VWAP would be the mean in this case. Right, as we're 2 standard deviations, obviously VWAP is the mean. So these are things. It's just an awareness. Where are you? What's driving the market? Are we in a very strong trend? Are we in a range bound? Range bound day. Often you'll see the market just waffle back and forth between IB high, IB low, inside of 1 standard deviation of VWAP on a trendless day. Very common when we have these big trending days here. You want to look for when we're getting up to 2 standard deviations. That's time to start looking for those trades that will orient you back towards VWAP. Right, very important. I wouldn't trade without it. As I've said before, things I would not trade the S&P without. IB high and low, VWAP, and I certainly would have my tick indicator. Right. There you go, guys. Okay, plenty to chew on there. There's tons of research and other resources for you to learn more about VWAP if you're really interested in digging deeper. It becomes very much of a visual reference for a trader here. It's not essential that you understand the inner workings of the market to take advantage of what it's showing you. But certainly something I wouldn't want to trade without it. Okay, guys, there you go.